What is a bear market? A lot of concerned new investors are asking the same question. What is a bear market? Well, now more than ever, it's time to find out. If you are a young or budding investor, you will no doubt have been exposed to much jargon and several acronyms within the industry, and you probably have a million questions such as: how much money do I need to start investing? What is the VIX? Can stocks go to zero? One of those unusual terms that you may have heard is probably the bear market. Contrary to popular belief, a bear market is not a bazaar full of bears buying and selling goods, nor is it a store where one can purchase a bear. A bear market is a condition in which the price of securities falls 20% or more from recent highs amid widespread pessimism and negative investor sentiment. In fact, at the time of recording this video, the stock market is in the midst of the fastest bear market in history. So, what does this mean? To put this into context, between the Great Recession in 2008 and the coronavirus panic of 2020, the market was undergoing its longest bull run in history, which meant that stocks were on the rise without a halt. The tech sector was booming, and big companies such as Facebook, Amazon, Apple, Microsoft, and Google saw their stocks soar. Think of a bear market as the exact opposite of this. In February 2020, the bull market ended and the bear market took over. The stock market took a beating and continues to do so, with many stocks that made massive gains in the prior 6 months, such as Tesla and Virgin Galactic, experiencing breakneck free falls, erasing billions of dollars of growth. To be more precise, America's key indexes, the S&P 500, the Nasdaq, and Dow Jones will all have to fall into bear territory, a 20% drawdown from all-time highs, in order to officially classify it as a bear market. What causes a bear market? Generally, a bear market is concurrent with a sluggish or weak economy. There are several factors that contribute to this, such as low employment, slowing consumer spending, narrowing business profit margins, many of the same factors that can lead to a recession. In early 2020, the bear market was caused by a mass sell-off in the market due to concerns related to the deadly coronavirus pandemic. As supply lines became disrupted and consumer spending slowed, the Federal Reserve began cutting rates, while investors lost confidence and sold shares en masse to avoid losses. At the time of recording, this reaction is still ongoing. Secular and cyclical bear markets. An individual company's stock can become bearish with a 20% drop, while the market can also hit bear territory, but there are two different types. Secular bear market. This type of market is long-term and can last anywhere between 10 and 20 years, and is defined by the market consistently showing below average returns. There may be rallies in this period, but it remains a bear market if these are not sustained. Cyclical bear market. The clue is in the name here, as a cyclical market can last mere weeks or several years, flip-flopping between growth and decline repeatedly. The cyclical market runs in, you guessed it, cycles. We're not fans of bears. Here, we maintain a buy and hold till you're gray and old philosophy, which means that we invest with the long term in mind. Therefore, market downturns, Bear markets and even recessions do not phase us, but rather present us with a unique discount buying opportunity of our favorite stocks. If you're getting started in your investment journey, always remember 6 golden rules. 1. Get started, no matter how big or small the investment. 2. Think long term. The buy and hold philosophy will outperform the market in the long term. 3. Never borrow to buy. Save first, then invest. 4. Diversify. Accumulate a minimum of 12 stocks across 6 different sectors. 5. Buy what you believe. Own part of a business you love. 6. Invest what you can when you can. Get your saving habits right. Combine these with our suggestion of market-beating stocks and you could be onto a winner. You can enjoy free access here and see it for yourself. And at the end of the video, you can join the 2.5% profit each day. You can find the link in the description. Thank you.